So recording is in progress. So once again, good morning, and welcome to the class. So graciously, yesterday our analysis played out fine. It's played out as expected. No, for those who attended the class on Sunday evening, I said that we should take our trade immediately the market opens. But something about XNES opens behind schedule, like 5 minutes behind, 5 minutes after the market has opened. That's when XNES opened. So that's why we have this gap. And some prop firms, they don't open immediately too. Like, for example, Funded Next. When Funded Next opens the market immediately. They try to open immediately as soon as the forex.com opens. But something about Funded Next is that you can't pick a trade until 15 minutes after the market has opened. Okay, so I've traded these guys well enough to know them. I think Goat Funded allows you to open immediately. Sorry, you open just like with the XNES. You can open a trade 5 minutes after the market has opened. Okay, so excuse me, I was able to enter that trade at 27.67 on my account. Yes, it was around this point. It was around I opened the trade around this point with this candle. When this candle was just still printing. That's when I opened the trade 67.6 or something. Okay, and I put my stop loss here. So I was risking about 180 pips instead of 150 pips originally. So, but since we already know, those who are in the class, I told you about 5 things that made the market, that confirmed that this market was going to sell to this point. I told you 5 things. The first was the railroad track on the 1 hour, these 2 candles, then an inverted hammer, that's 2. So you have 2 kinds of candlestick already showing a reversal. I mean, like telling you that okay, a shift in trend is happening. Then the next thing we had was what? The head and shoulder pattern. Those are the chart patterns. The head and shoulder, which is the third one. And then the fourth one, was, I think, if I remember correctly, I think I mentioned this bearish candle, and then 2 candles close below our 5 and 13 EMA. Yes, below our 5 and 13 EMA. So we had these 2 candles close below our 5 and 13 EMA. So I knew that the market was set. Okay, not only that also. Okay, and how do I know that it was going to get to this point? I knew that the market had completed its cycle for buying, at least up to this point, right? For maximum large-scale buying, the market had completed its round for it. And the only way to know that is by counting the levels, right? If you count since when did this buying, since when did it start? It started on the 19th of December, okay? And it reached its peak on the 24th of December. So if you count that, that's about 5 weeks, okay? And I made mention of something that the market moves in cycles, okay? So typically, you see, the lifespan of a cycle is 1 week, okay? That's 1 week means 5 days for gold, right? So 5 days. So the markets can have 2, 3, 4, 5 lifespans. So for this bull run, it had 5 lifespans, okay? So between December 19 to January 24th, I think it was 24th. January 24th So we had a consistent, not a consistent bull run, because bull runs are not consistent. Like they are, it will reset to go up, reset to go up. The sell trends are usually more faster, and yeah, they are usually shorter, right? So of course you expect that the overall trend, right, based on the bigger time frames, using the monthly, for example, the overall trend is still bullish, right? The gold has been buying consistently since 2018, right? You can see this from this point. So it has been buying consistently for that long. Okay, so the times when we had a bit of consolidation on the monthly time frame was this was when was this? Yeah, between 2020 and 2022, right? So it was more or less consolidation, and immediately on the monthly time frame, immediately this pattern was formed. This is like the um, this reversal. I wanted to give it a name before, but we have this 1 2 3, these three candles bounce off of our 50 EMA on the monthly time frame. Just launched it. So since 2022 November, the market has been buying. So if you took a trade in 2022, and you leave it till this point, that trade should have given you from this point 1,632 to that's about 11,000 pips. Even if you use 0.01, that will have made you about $1,100. Okay, so this is just the summary. Or if you use 0.1, it will have given you $11,000, right? Just investing in gold from 2022 to this current time, 2025. All right. Okay. So enough of that. Um, so this was just to show you that okay, the market was going to buy and to sell rather, and then okay, why did we have this reversal? I told you. So when the market reached this 100 EMA bound, right? Of course, this first candle close that was well above this line, it signified that what it was going to do a temporary shift. In fact, when I saw this, I knew that the sell setup was going to hold, but I just told myself, I've always told you guys that if you see two candles, when you see two candles close above a trend, right? Two candles close above the candles that was forming a former trend that we should close. But what happened was that this was exactly where I asked you guys to enter at 27.61 for those who entered late, right? 27.61. And why was the reason? The reason is simple, because it was at this point that the market this was when it hit our 50 EMA, and I knew that based on my observations of the market, when the market hits the 50 EMA and also the 25 EMA at this point, it was supposed to reverse, right? But look at what it did. Of course, this was market manipulation at the finest, right? Because at this point, if we did not have the grit, we would have thought, oh, this thing has failed, right? And it could actually fail because the market, but because of this head and shoulder pattern, that was why it did not go beyond there, right? Because I remember I asked you guys to put your stop loss here. Stop loss at 2773. And look at where the market reached, 2772.1. So we had about 9 pips more for it to have taken us out of this trade, right? And so it would have been painful. But I guess because of the head and shoulder pattern that has been formed, it did not want to destroy that beauty that has happened there. So it just reversed. In fact, I had said that even though it was going to be too late, I said if I did not see a drop, right, if this candle had not dropped by 1 p.m. within the first 15 minutes, I would have asked you to close this trade. But thankfully, I was not fast. I exercised a lot of patience yesterday. It was, I know it was the grace of God, because I just couldn't for the life of me understand why the market had to go this high. Okay, so I just told myself, if by when 1 o'clock candle opened, and by our Nigerian time, if the first 15 minutes does not take out this high, takes out this high rather, I was going to ask you guys to close. But thankfully, it reversed and it fell back into our 50 EMA. So I just knew that, okay, the trend was going to continue. Okay, so the sell continued consistently until it reached these turning points. Okay, so yeah, so that was what happened. So yesterday we made, for some people they made 280 pips. For some it was about 350 to 380 pips, depending on the time they entered. Okay, so I also made mention of something when someone has a question that, okay, do I think the buy was going to resume? And I said, okay, it's going to consolidate for some time. So what we are having here, of course, we had a temporary move upwards, right? But you can see with this, okay, this is an inverted hammer on our 13 EMA that is reversing, and this already tells you that, okay, 7 o'clock is going to sell it, 6 o'clock is selling it. So it had hit our 13 EMA. So I expect it to come back here. Okay. And actually, when a trend has been established, I just personally I don't enjoy trading reversals, right? And one has to be very careful. So we're already in a sell trend. Don't get it wrong. We're already in a sell trend. So and you've already made some substantial money here. Just be calm. So what's happening here is that on the 200 EMA, which is our white line here, okay, a reversal happened immediately when I saw this candlestick. When I saw this first reversal candle, and then this candlestick closed above the open of this sell candle, I knew it was going to buy. But for how long? I don't want to. I've exhausted myself staying up all day. So I don't want to stay up all night to be monitoring another trade. That was why I just ignored this. Okay. And you can see it moved from this close, from this place to this high. It moved about 150 pips. Okay. But I don't want to keep vigil. Yeah. And the funny thing about trading reversals is that you don't know when it might turn. It might be when you are dozing off. Right. So I just left it. I ignored it. Okay. So what's going to happen here is, of course, I can't adequately predict. The market might decide to first go and touch our 50 EMA, which will be good for us, because the next bounce I'm expecting for us to take advantage of the sell is that when I see the market touch my 50 EMA, when I see a reversal pattern on the 50 EMA. So we're not going to do the same thing we did here yesterday. Like I said, you should enter at 261 because it's touched. There are times it goes around to cycle it. Okay, because I'll just say we were lucky here, because ordinarily when we took this trade, our stop loss should have been at this high. When we took the trade of 2761, our stop loss should have been at this high, but I said this because I didn't expect it to get here. Well, good works in different ways. So of course, I think the market might come like within the next 2 hours. This is already 7 a.m. Within the next 2-3 hours. So between the 8, 9, and 10 candle, I expect the market to either come here to come and retest this low, right? It might want to take out this low, which it might not successfully be able to do, or it might be able to do. But the real thing we are looking for is that I want to see a reversal pattern on my 50 EMA, right? So I want to see a reversal pattern on my 50 EMA. When I see it, I just say, okay, we enter our sell and put our stop loss just above here. It's not going to be above here because of, so it's going to be above that inversion candle. Okay, that reversal candle, that's where it's going to be above. Okay, so I would like you guys to just stay tuned. And okay, where do I think it's going to sell to? That's another question. Okay, primarily my target, okay, this on my systems, on this chart on my system, I don't have enough. Um, I didn't put many EMAs on it. Okay, but where do I think it's going to get to? We should touch that place. So the hot spots that I think it's going to get to, number one is okay. So there are some liquidity points. I think let me switch over to my trading view. Okay, so the way to know this is so we want to mark out our liquidity points. Okay, so where are the expected places is going to go to? So this is 1 hour, and I'm expecting to react to this. My guess is that it's the place to react is at 27.49 thereabouts, right? So we might be able to get our sell from that region, and of course our primary target would be this low, the low it first touched, which is 27.31 and 27.30 thereabouts. I think where is it? Yeah, 27.30 point. Let's say 27.31. That's the first place I expect it to get to. Okay. So from, let's say we enter at 2745 to 2730, right? That's our first reversal point. And sorry, that's our first liquidity point. Okay. Okay. One other way, let me just do this now. Let me say this. One other way to understand the change in the trend is, some forex traders say it a lot, the high lows and low highs, right? So we already have, when the market was coming this way, this was a higher high, a high low, right? Then we had another higher high. This high is greater than this high. Then this low, higher than this low, okay? Until it peaked here. Now, then we had this higher high. This was the last higher high. Then we had the lower high, right? The lower high, this part. Let me see if I can increase this. So we have the lower high here, and then the lower low, right? This particular, let me bring this here. So this is a lower low. This is a lower low because this low is lesser than this low, right? This signifies a change in trend already. We had higher high. This was the peak of the market. So we have this lower high here, these two, lower high, right? And then you have lower low. So this low below this high below this high. Again, we had another low here, which is below this low. So those already helps you to, understand the candlestick chart patterns. Also helps you to know that okay, we're already in a sell market, right? So that's just it. So we're already in a sell market. Okay. So I'm expecting a reaction to my 50 EMA on 1 hour. Then I will sell from there. So like I said, our first point of interest is this place. Although I think it might sell below that place. It might sell below. Okay, so this is the first point. And that's the point we are going to be targeting for TP. Then the next is this region also. So personally, I don't like targeting the lows, right? I target the points where they confluence together, like in this case, this place. by confluence, what I meant to say is where the open and the close of the candle. So this place. So if I'm selling, okay, these are going to be my. Now I'm putting this here because I know. Okay, let's say the first is going to get to 26, 30, about 34. Okay, so I'm targeting the body of the candle. That's the open close positions, not the lows. Even though it might take out the lows actually. Okay, then so 2734, 2720. Those are the points we can exit our trade. Then where else will that be? Again, look for where there is liquidity. Where there is liquidity, and okay, around let's just say around this point. It's better to be conservative when you are trying to TP than to be. It's better to be conservative than to be confident, to be cocky. You don't need to be cocky. You just need to be conservative. In as much as you are making money, you are making progress. Okay, and there's also some liquidity point at this point. In fact, this block. So it just depends on how long the market is going to last. Okay. Personally, I think that within this week, especially since Monday dropped this much, since you have Monday drop this much, drop about 400 pips, I believe that this week we should get to 2790. And if you have seen the market this thing, there is not much news this week, but there is a FOMC, I think, on Thursday. The last time I checked, let me check. I think there's FOMC on Thursday night. So that might bring the market down or up, depending on where the market is. So we have a news this today by 4 p.m. CB consumer confidence. Okay. Tomorrow is FOMC, 8 p.m. So we have a FOMC tomorrow, and of course, FOMC tomorrow. Let's see how it goes. Okay, so this block is what I'm talking about. This block is quite FT, because there was a reason I marked it. So I think the market might get here. Okay, what I was projecting at this 2720. Of course, this low is this low of 2716. Okay, so I expect the market to actually crash into this point, because these ones were established when the market was buying, which means that it was not entering into the liquidity very well, right? Because it was still buying, right? If you remember, we took this trade at 27.26 last week, Tuesday. Okay. I don't remember, but I remember because I'm the one calling the trades. So we took this trade at 27.26 and put our low at 27.16, right? So this low is not genuine in the because the market typically, what I've observed with gold is that when it wants to buy, it won't sink into the liquidity point that you expect it to sink into. It won't fall into it. It will hold that position by about 20 pips up, right? It was the same thing that happened here when it got to 35 and we're expecting to TP at 27.33, right? So it gave a 20 pips gap and then it reversed from here. Whenever you see those kind of stuff, it's not getting. When you see this reversal and then the next candle confirmation, just close your sell trade and start buying. So that's the lesson that I have learned in this thing. Now, when we expect it to get to 33 here, right, and see what it did, because the trend was already a sell trend, it just fell 30 pips below, right? It's closed at 27.30. So because it was selling much into your liquidity points, right? So that it will buy a little bit more, get to about 2748 or 2749, then fall a little bit into this region. So it might not be this 2720 that we are targeting, that it might fall below this, get into like 2717 or 2719, whichever. Okay, so I will just try to map out the necessary points, the important points for liquidity. Okay, actually I would have preferred if the market will fall here first, but it might not. With what it might not, I don't know. If it falls here, if it has taken out this, if it has come to retest this liquidity point, I'm quite certain that when it goes up, it's going to come down and break this, and then try to test the next liquidity point, which is 2720. So thereby giving us the chance for a higher win rate. All right. So, but if you want to long this trade, if you want to swing it, I think it's going to get to like 2790 by my calculation. 2790. So I'll just switch back to I'll switch back to my trading view, my meta 5. Okay, so on meta 5, what we just do on meta 5 is that these moving averages, they are constantly changing, right? Because as the market is moving, they are moving. That's why they are called moving averages. And the averages there means that is the average liquidity points. The way I understand this, the average liquidity point is going to try to touch all those points. Okay. Okay, so if you have this, so if you might not have observed, you see when you are seeing small candles, those are symbolic of consolidation. So it can be very depressing to be in this kind of market. Okay, so like I said, if our 50 minute, if you have a reversal pattern on our 50 EMA, we take a sell. Okay, so where are we targeting? Targeting this point, this 2714 to 2719 region. Then this point, this is my 600 EMA. Okay, my 600 EMA is it's saying 2693. Personally, I think it's around this region is going to stop. 2693 or 26889. Like this week, I expect it to get to this point. Okay, I don't expect you to take out this high again, at least all through this week. I don't expect it to happen. Okay, and I thought I was going to be able to tell you about the EMAs. So one thing about EMAs is that, see, if there is a lot of it and you're not used to it, it will confuse you. But it's like, you know, trading successfully is like finding a needle in a haystack, right? So you want to do it correctly. So I did not install many EMAs on my. I did not install many EMAs on my laptop screen, but on my phone screen. Let me check the number of EMAs I have. This is about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 22. I have about 20 EMAs installed. Of course, not all of them are working at the same time, but it's just to help me safeguard my trade, to guide me. Okay, so here I still have I'm still a bit conservative. So I have 1, 2, 3, 4, 5, 6, 7, 8. I only installed 8 here, but my phone screen is about 22. It's 22. So, but personally, I think the more important ones are on this screen. So if we should enter sell from, let's say, 2748, 45 ish, okay, where is my primary exit point? My primary TP, my overall TP, at least for maybe a week or two, it will be my 800 EMA, which is marked by this blue, this deep blue, right? My 800 EMA. Remember that these EMAs, they move as the market moves. So by my projection, I expect gold to get 2690. Okay? So if I should take a sell trade here, and I don't want to bother myself, that's if I want to swing trade, I'll take a sell here. Okay. And maybe to just give it a generous tip, I don't want to be bothered by the trade for some time. So I'll just put my stop loss here. But that would be quite much, because this we're talking about 250 to 300 pips stop loss here now. Okay, although to be conservative, you put your stop loss just above your high, so that in case there is any mishap, so you put it above your above the high that is formed around this region, and put our stop loss. Then where is our take profit going to be? It's going to be where I can find my 800 EMA on the 1 hour. Okay, let's see. Let me show you the things that have happened in the past when the market was selling. Okay. So this is something that is quite typical of gold. What's happening? Okay. Now look at this. This is when gold sold. Of course, this took about from this peak here 1, 2, 3, 4, 5. Okay. So this is 5 days for this market to sell this much. It's sold by how much? So from this point to this point. So it sold about 1,315 pips. About 1,300 pips within 5 days. Right? From here. More than 1,300 pips. Okay? And see what happened. Trying to bring this. Okay? So this is what happened. You can see this sunk. The market sunk below our 50 EMA, and then what? A reversal, even though it was not well touched. So we can be very beware. We can be aware of that also. Man, in this case, this did not touch this EMA. Okay, it didn't touch the EMA. It just reversed at this point. But typically, it touches the 50 EMA and then starts falling. Okay, so after the first bounce, it touched the 50 EMA. Then it's penetrated into our 200 EMA and then our 800 EMA here. Usually, this is the nice point to just close your trade if you are selling from here. Okay, so the trade we closed yesterday, we could still have left it, but I want to be reasonable this time around, because I want, my health is my priority. If the market has sold a little, if it has sold to a primary point of interest, just close it and then wait for another setup and enter again. Okay. So this is where we are supposed to have closed the trade here. Let me see if I can still show you some other examples. Am I making sense at all? Please, you can unmute your mic. Let's talk. Do you guys understand what I'm saying?
Yes.
Okay. So these are another sell points. This happened on 22nd of November. Okay, look at what happened. Okay, all the necessary chart patterns have played out. It fell, and then what? It reversed back into what? Into the 50 EMA, and then it fell. Okay, this was more or less like what played out yesterday, right? This played out yesterday, but because now this one is because the 200 EMA and the 800 EMA, they are close to each other, right? It fell, but look at what happened. So it's turned back within 2-3 days. So this is what I talk about consolidation. When someone asked a question yesterday if it was going to buy from here, I said I expect the market to consolidate for like between 12 hours to 96 hours. And of course, you know that if you're in this cell, your mind might not be at rest. In fact, it might have broken even here after a long time. So you just take your time and let the market do its thing. Again, it's reacted at our 800 EMA here, started selling a little. Now, when you notice that, especially in a sell trend, the market is selling and the lows are not taken out. That's like when it hits your 800 EMA. If it's hitting your 800 EMA, if it's going to sell more, it's supposed to take this down more. Like it's supposed to take out these lows, but that was not what happened in this case, right? So of course there was a lot of consolidation. It didn't take this out. When you are seeing this, when you are seeing higher lows, when you are seeing higher lows instead of lower lows. Instead of lower lows, this is a low. This is a lower low here. This is a higher low to this. This is a higher low to this. So this is just telling you that, okay, it looks like this market might start buying again. Don't ignore those things. But of course, it's consolidated for about 2-3 weeks here. It's consolidated. This was why November trade was crazy. If you remember, we made some substantial loss in November. I remember I lost about 3 proper accounts in November, and it was because of markets like this. So sometimes, I don't want to give you excuses, but there are times that it's easier to analyze the markets when you are seeing it in hindsight, like what we are doing currently. But if you're in the market, and I just feel like, okay, this thing should have just gone down or gone up, something. So you can fail a proper account if risk management is out of the door. You can fail a proper account because of markets like this. So this was a long stretch of consolidation. This took 2 weeks, right? From here, this is Monday to Friday, Monday to Friday. So either you are buying or you are selling. You might be at a loss in this kind of market because there was a lot of consolidation. So it's our responsibility to look for, when is this market going to consolidate? Now you might not get it correct accurately. There are times the market just consolidates for about a week. There are times it happens for just 3 days. But this one took 2 full weeks. So these 2 weeks is enough to blow any money you have made selling from here. God forbid. Okay. So we should just be careful with our risk management. That's just the bottom and short of what I'm saying. Of course. So when we are having higher lows, okay, look at this high and this low. This low, do not take out this low, right? Okay. Of course, it eventually came here. It did not take out this low. This one took away all these ones, but this was just giving you the second leg or the third leg, so to speak. So this successfully formed a W pattern, right? So this low came, but it did not take out this one, right? This just formed a W pattern. When you see bullish engulfing candles, and then eventually when we got this break above, when we saw this break above this engulfing candle break above our 800 EMA here, just started buying up. Okay, I bought to this point before falling again. Oh Jesus Christ! Okay. I'm coming. I want to look for another lower, another sell. Sell this thing to confirm our buyers. Okay, so we have sell here again. Okay, so this is even more representative of what happened yesterday. Okay, 2 candles close below our. So this happened on October 31st. Okay, this happened on October 31st. We had 2 candles close below our 5 and 13 EMA. The market started falling. So you enter your sell here, put your stop loss just above. above the initial high created. Excuse me. It reacted with our 50 EMA, bounced up, then it fell down towards our 200 EMA. So this is like the point we are in now. Okay, and it reversed, and look what happened. This one came, it did not even touch this 200 EMA. It doesn't have to touch it. But when you see this reversal, you just know that okay, it's coming for the 50 EMA. So when this candle is formed, when you see this inversion, after this candle, let me see. Okay, this is what I'm talking about. So when you see this inversion, this happened around 2 p.m. our time. When this happened, immediately this candle closes, right? Just you put your sell, your stop loss here, and see what happened. So it started falling. Okay, where is it? Okay, from here, you entered your sell. Where is it? Where is it? Where is it? Okay, this was the point. Started selling from here, right? So it started selling from here down to until it reached the EMA. What was this? Okay, I was trying to pick this now. Okay. Okay, so sold from there, and it took how many days? 1, 2, 3 days for it to eventually get to this point. Although what happened there was looking more like it wasn't really a consolidation, but the market did not move very much. Okay, and then this was 27, 57, 27, 56 to this point, 27, 27. So the market actually moved, but it was just undulating. Okay, so if you enter our sell here and our target is our 800 EMA to take P, or this EMA, this 600 EMA. 600 EMA is also a nice place to TP, to be honest, right? But 800 EMA, you just have to wait a little bit for it to get there. Okay, so if we take our trade on a day like this is November 1, and then it took 1, 2, 3 extra days. Okay, this was November 6 before we could close this trade. Okay, so but the result is always beautiful. How much is this? From 2756 to 2678. This is about 775 pips. 775 pips. Okay, not bad. That's double what we made yesterday, actually. So not bad for a 5-day trade. Okay, but look at what's continuing to happen. It's when it's touched the 50 EMA here, it went down. Now it was forming lower lows, right? This low, let me measure it. Okay, it did not form lower low until this. So this low took out this low. Then we had another low here, taking out all these lows. Then we have another low around this point. Okay, so this was exactly what happened, and then it was also still reacting each day. Each day it was touching. From the first day, it touched 50 EMA. So you can see again, it touched this place at 50 EMA again. So each of the days, it was trying to touch the 50 EMA. Of course, some people will see this and feel, oh, you're going to buy more and enter for a buy, aren't you? It will just cut them short. So it was reacting with our 50 EMA consistently until it eventually fell. Okay, so that's just the dynamic and the craze about trading. But I also pray that God will help us to continue to be able to interpret these things correctly and to be able to excel with them, because that's the only way forward, to be honest. That's the only way we can be sure that success is guaranteed. Do you have any questions? Mm. Hello. No questions. It's always good.
So I guess I got in late. I actually thanks for the insights that you shared. I actually wanted more in-depth breakdown of how to use those moving averages correctly. I picked a thing or two anyways, but I just wanted more in-depth on how to correctly use those moving averages. But since I got in late, probably you covered it before I got in.
Yeah,
So
I think
thanks for the insight. Yeah.
you're welcome. The recording will be put on YouTube, so I will send the link. You can go and rewatch it. I try to explain, um, you know, the interactions between the EMAs. Sorry, I still feel a bit sleepy. I took a sleeping pill yesterday night. That was why I woke up late. So yeah. So I'm going to drop the YouTube link so you can rewatch this video, right? Of course, see, I can't unpack everything that is happening. It took a lot of this was personal discovery, to be honest, and then a lot of observations, you know, of the market. But one thing about it is that the more you interact with the market, the more you see, you find ways to better your trade, the better you become at it. So we can't unpack everything that is happening on these EMAs in just one video. So I will try as much as possible. We'll be making reference to it time in, time out, in our classes. So with time, you guys will also understand how it is. And um, I'm going to share again. I think I've shared it before. You know, the place where you are going to, like, the EMAs to install. But if you are not like me, if a lot of indicators, if they mess up your brain, you know, a lot of trading indicators, if they mess up your brain, I won't advise you to install everything. So, like I said, on my own phone alone, I have about 22. But on this system, it's just 8 indicators that it was 8 indicators that I put on my charts on the laptop. Okay, so I think the 8 is enough. It's good for the laptop. But one thing I've just observed is that there are always bounces around your EMAs. There will be interactions along it. So, in subsequent classes, we make reference to it. Usually, it will make more sense when the market is reacting to them. If the market is not reacting to them, like during the buy trend, the market was constantly reacting with EMAs like our, of course, 5 and 15 EMAs, it's constantly reacting every day. Then you have the 25 EMA. Then you have the, let me go back to my chart. So the 5 and 15, they have the unique colors, red and yellow. Then you have the 25 EMA, right, which is this light brown, the 50 EMA, 100 EMA, and what was this one, sir? The 150 EMA and the 200 EMA. So when the market is when the market is buying, when the market is bullish, so you experience constant and occasional reactions with each of these top 6 EMAs. Okay, when the market is bearish, you see more interaction with 800 EMA, with 600 EMA, 800 EMA, right? So, of course, you see some reactions with the others too, but you see more reactions with your 50 EMA, 600 EMA. So you see most reactions with, just depending on what's the direction of the market, you see the reactions with them, the interactions with them. So I'll just ask you guys to just keep attending the class, really. And also, you can install them. I will show you the more important ones to actually do. I will tell you to install them, and then you can personally observe the market reaction with the interaction with them personally. All right. So thank you, guys. And do you have any other questions? Okay. In the absence of any other question, I think we call this a class. Have a wonderful day.
Thank you.